If you're tired of inconsistent trades and missing out on quick profits, this 5-minute scalping strategy using our Indicator X will change the game for you. In the next 5 minutes, I will show you how I caught a winning trade using this exact strategy. So stick around because you won't want to miss out on this. Today I'm breaking down a strategy based on the master pattern concepts using Indicator X, our secret weapon for quick and profitable trades. The master pattern represents the 3 market phases: contraction, expansion, and the trend phase. With Indicator X, we've simplified the process by automatically highlighting these zones and making it easy for you to spot trading opportunities. We're here on the charts and I'm looking at GOAT USDT. This is a cryptocurrency token. It's a very new and volatile token, and these tokens often make explosive moves. If you can look at the chart right now, you can see I've got Indicator X on the charts, and you can see over here this green contraction box. This is known as the first phase, which is the contraction phase. The contraction phase is when the supply and the demand becomes equal, where the buyers and sellers agree to fair market value. This is precisely the location that you really want to become aware of. From this point, we get an expansion line or a value line that's projected out the center of the contraction box. This gives you a very accurate key level that shows you where's the best place to buy, where's the best place to sell. And then we've got our liquidity lines that are projected at the swing high or swing low points. These liquidity lines are showing you exactly where stop loss levels are located and pools of resting liquidity. These are excellent places to exit your trades and also to enter your trades from. Let me explain to you how these 3 phases work. We've got phase 1, which is the contraction phase. Then we've got phase 2, where manipulation and expansion starts. Price starts to expand around this value line. Once price is expanded above and below this value line multiple times, then price will break out into the 3rd phase. The 3rd phase is where price deviates away from value, and this is known as the profit-taking phase. So you can see we've got 3 phases on the chart: contraction, expansion, and then the trend phase. These 3 phases happen over and over again. This is how the market moves, and by understanding this 3-phase pattern will help you break down the seemingly randomness of the market into defined phases that will give you more data and more information about how to enter your trades. This strategy that I'm going to be showing you today is designed for fast trades on the 5-minute time frame, and here is what you need to look out for. What we do is we wait for price to expand out of the contraction phase. Then price expands out of this box, and then we mark out our demand zone. As price taps into this demand zone, we know this is the best place to look for an entry because it's underneath our market value line and it's coming to a range low area. And this is precisely where resting liquidity is located. What we would have done in this scenario is we would have set our stop loss under the demand zone or underneath the swing low. We would have set our first target at the value line. Price always has a high probability of going back to value. And our second target would have been the closest liquidity line, where we have pools of resting liquidity. Now, I want to show you a live trade that I took yesterday using this exact setup. When I came to the charts to look for where I was going to find the best place to enter this trade, the first thing you want to do is understand what is happening on the higher time frame bias. So when I came to the chart, this is precisely where price was located. And you can see this is our value line. So price has just broken above a higher time frame value line. This is one of the signals that lets us know this is the time to start looking for a trade. So we always look on the higher time frame first. Once the higher time frame confirms this, then we jump onto the lower time frame and we start looking for entries. Since the higher time frame had confirmed that we were moving an upward trend by breaking above the higher time frame value line, as well as flashing off a flat back Heikin-Ashi candle. This is the criteria that we teach within our Discord group and one of the methods we use with confidence to trade with Indicator X. Here's a quick look in our Discord group. You can see the guys are killing it. They're making crazy profits. Look at this, 1,793% on a trade, 133% on a trade, 82%, 91%, 955%, 889%. Guys, our strategies work, our training and our system works. Click the link below, check out our website, come and join us, and let us go get those profits. Since the higher time frame had confirmed we were in an uptrend, I was only looking for long positions on the lower time frame. Now I drop down to a 5-minute time frame, which is my entry time frame. And you can see over here, I have a new master pattern cycle that has started on the lower time frame. We have the contraction box. So all I'm doing is I'm waiting for price to break out of this contraction box and go into the manipulation phase or the expansion phase. As you can see, it breaks out of the box and starts whipsawing around this value line. Now we only want to look for entries when price is below the value line. And we mark our demand zones or fair value gaps or our resistance or support levels. So as you can see, I marked out this gray zone over here, which was actually a support and resistance level, because you can see over here, we had resistance, and usually resistance becomes support at this region. And since price was underneath this value line, this is letting us know that this is the best time to look for an entry, because price loves to come back to value. The value lines are magnetic levels. And then for extra confirmation, I use the TDI X. The TDI X is our companion tool, and it just helps us get better entries. So you can see whenever we get these shark fins, and we get this white RSI line that breaks out of the Bollinger Band, that lets us know there's a confirmed reversal happening on the lower time frame and acts as an extra layer of confidence to help with your decisions. And also you can see price came and it tapped into this liquidity line over here, and we got a nice rejection, and this precisely was the place where I entered this trade at this entry level. My first target was going to be this liquidity line at the top here. But when price broke above this value line, I started seeing weakness here, and I just decided to exit my trade at this position. Trading back to the value line usually has a high probability of succeeding. Usually 70 or 80% of the time, price retraces back to the value line. So if you take your profits at the value line, you're going to walk away with profits on the table. If we summarize my setup, I basically entered at this point when I started seeing these huge wick rejections. That is often a sign of reversal. I set my stop loss just under the swing low, and then my target was initially this liquidity line at the top. When I saw this weakness of price just above the value line, I exited my trade. If you want to start winning more trades like this and get access to our exclusive Indicator X, alongside with our daily live trading and our full mentorship program, we offer training courses, real-time signals, and everything you need to succeed in the trading market. If you found value in this video, don't forget to like this video, don't forget to subscribe, and I'll see you in the next one.